Peut-être faisons par ordre de questions, si tu veux. Roland, si tu veux te mettre à côté de moi, on mettra Alexandre ici et Giuseppe. Ça suit les premières questions.
Chacun prend son micro.
Prenez les micros, il y en a 3, je pense qu'ils sont bons. D'accord. Vous dites non.
Je me mets une chaise plus petite, mais les deux. Je vais mettre debout là.
Good afternoon, everyone. Welcome to this workshop organized by EY with the participation of Nuward, Natixis, and Hexagon. So today we will explore a critical question for the future of clean energy, which is how to make investment in the nuclear supply chain more attractive. We will approach this topic with 3 complementary perspectives from a technology provider with Roland, Franck, Director of Finance and Strategy at Nuward. From the perspective of a lender with Alexandre Fauquert, Director at Natixis. And from the perspective of a VC venture capital fund with Giuseppe Sangiovanni, managing partner at Hexagon. So thanks for joining. This discussion takes place in a broader context where EY is proud to release a new global white paper on nuclear financing, which identifies capital needs across the entire nuclear fuel cycle and value chain, and look at addressing key risk and unlocking new investment opportunities. In this EY study, we estimate that around $3.6 trillion in financing will be required by 2050, not only in new generation assets, but also the supporting front end and back end infrastructure that underpins the generation assets. In the white paper, we also examine new term financing needs for the nuclear industry, the barriers for private sector participation, and the emerging financial and risk-sharing mechanism that could help mobilize investment. With that, I'm going to turn to the participants today with a broader question, a general question, and also take the opportunity to introduce yourself. Starting from you, Roland, what's your experience and perspective, and what are the key challenges and barriers that must be addressed to make nuclear value chain investable at scale?
Thank you, Julien, and hello, everybody. So I'm Roland Franck, Chief Financial Officer of Nuward. Nuward is a Gen3 SMR technology we are developing with EDF. To answer your question, I think first, an important point is that technology is not the barrier. Today, investment and deep tech investment in a very capital-intensive, various, very technical sectors, such as, I don't know, computing, hydrogen, and on these sectors, investments are huge, even if they are long-term. And we can see as well, and we're discussing with Giuseppe, investments are sometimes inversely proportional to the maturity of the technology. Look at fusion. Today, Commonwealth fusion raised something like 10 billions with partners of several billions euros, 2 billions for Commonwealth fusion system. So technology is not a problem. If you have an innovative technology, that's not a problem. And for Nuward, our technology is not very innovative. It's a Gen3 water pressurized reactor, and it's not a problem. Where I see problems for investments, there are 3 kinds. First, from delivery, and we have to prove that with SMRs we will be able to deliver our SMRs with an industrial approach, taking under control risks and delay, and that would be new for modern nuclear, unfortunately, and that's the goal for SMRs. And it's on our side. It's on our side. Second, revenues is more than state tight. I think electricity, energy markets are too much volatile today. Carbon prices are too low, and the uncertainty on energy markets makes investment very difficult for assets which lifetime is sometimes 60, 80, 100 years in nuclear. And third, policy. I think nuclear will still be an asset with very specific risks that investors alone will not be able to handle. For example, nuclear regulation change. If we change regulation in nuclear safety, the design changes completely and new costs explode. So the society has to propose a safety framework and then back the risks of a further a change in these regulations. So that's the three topic: delivery, revenue, and policy for me today.
Thank you, Roland. Alexandre, from a lender's perspective?
Thank you very much, Julien, and hi, good afternoon, everyone. So Alexandre Fauquert, I'm a director in the energy transition team of Natixis, focusing on low carbon energies. So I would say, as a commercial bank, one of the key ways we can help have the nuclear chain become more investable at scale is to unlock debt financing, right? So I guess there are two key challenges to that. First of all is that historically the financing of nuclear power plants has been done through the balance sheets of state-owned utilities, right? So it means that we have a limited track record of using project finance for those assets. And so it means that it's hard to design a bankable structure because we have limited precedents. The second one is related to the point from Roland, is that construction risk is extremely complex. And of course, we can face very significant delays and cost overruns. So there needs to be a form of risk-sharing mechanism, especially with governments. It can take different forms, but it can be a regulatory framework. It can also be state guaranteed, directly provided to the financing. So I guess for us, by participating today in financings that we see are bankable, we are building this track record such that we have precedents on which we can leverage to build the projects in the future.
Thank you, Alexandre. Giuseppe, from a VC standpoint.
Yes, thanks for the invitation to this interesting panel. I'm Giuseppe Sangiovanni, the co-founder and managing partner of Hexagon. Hexagon is a venture capital fund focusing on the deep tech within the energy transition space. And in particular, we address what we call the sovereignty technologies, the energy security dimension, and sustainability. We have three verticals in terms of sectors that are the new nuclear, the energy storage, and the energy efficiency, in particular through AI-based enabling technologies. Now, within the new nuclear vertical, we focus on the fourth generation of new nuclear. So what you call the AMR reactors, the advanced modular reactors. And in this new segment, indeed, the value chain is still under construction. There is a lot still to be done to make these players in the position to move on their roadmaps and to make their technologies to progress. Now, a very important, let me say, element that is an historical happening in this sector is that for the first time, private capital entered the game. It never happened before. Nuclear energy has always been financed through state and government-driven financing facilities. Now, the private capital is, for the first time, investing in these technologies. And we are actually representing an independent private investor, thanks to our own investors, that's LPs. And our job, let me say, is to give the capital for make these technologies to progress from their very initial early stage that you measure in a scale that's called TRL. And in fission is normally considered at the beginning between 4 and 5, all technologies together. In fusion, you are more likely between 2 and 3. And what we do is that we invest and we make these technologies to move from this TRL, 4 to 5, to 6 to 7, 7 to 8. We add +3 steps, and this allows them to move on to de-risk the project and to attract other investors that are less risky takers, and they need a more mature technology at a higher level of maturity in order to invest.
Thank you, Giuseppe. Back to you, Roland. What do you think? So, we often talk about first of a kind to fleet effect for SMR. So, in the case of Nuward, what do you think is the most credible financing path for revenue models? Sorry, for the first 2 to 3 units versus the units that will come afterwards. So, 4 to whatever 10.
Giuseppe is very right, saying that for the first time in nuclear history, private capital is flowing in nuclear. That's a game changer for our industry because it accelerates innovation, it accelerates projects, it makes all our industry more professional under the pressure of professional financing actors. And that's very new, and that's a chance for nuclear. I think that for the first 2 to 4 first modules or nuclear power plants, we can raise private money, even if they are the first one. Of course, there will be some specific risks for the first. The cost will be higher. The industrialization will not be ready because the module factories will not be yet, working on a nominal basis with a nominal price. Yet there will be uncertainties. There will be political aspects. The market will not be established. Still, as it was mentioned before, I think the states can come along to make sure with a funding gap approach to make all these assets investable from the first one. Funding gap, let's give a few examples. For example, for the market energy volatility, we talked earlier about CFDs. We can, organize CFDs for the first plants. It happened in renewables. There is no technology, any technology in renewables, which did not benefit for a regulated price for the first, for the first assets, and that be the same for nuclear. Risk sharing mechanism, a second instrument that's very useful for the first reactors. Reimbursable advances, very interesting tools for governments. They can invest in nuclear in depth, and if the project in the market in this globality fails, you do not reimburse. But if you make your business plan, you reimburse with an interest, and everybody is winning. It's what does Airbus for the A350 programs or A380. When you have massive investment to invest in manufacturing, in launching your industrial supply chain to get your costs and your process under control. So that I think that would be the scheme for the first. So we can imagine with this government package, industrial infrastructure funds, common infrastructure funds, public and private debt, and of course end users, industrial consumers of heat, electricity can invest in the asset, and more common utilities investors, but maybe which will be with a minor position in the project. So, and for the following ones, I think the more we will be industrial, the lower will be the cost. The more we will be able to be close to the market practice, and maybe in a further future to be able to invest in a nuclear asset without government.
Yeah, thank you. Alexandre, from Natixis' experience on financing large-scale nuclear power plants, which risk mitigants made the difference, whether it's sovereign support or tariff, regulatory visibility, CA cover, etc.? Can you tell us a bit more?
No, thanks, Julien. So indeed, we have recent experience, but I'm not allowed to share specific details about that. But hopefully, in the next days and weeks, we can release something. But yeah, so look, I don't think there is any one specific mitigant that you mentioned that makes the cut. I think it's really the combination of all of them that makes a structure bankable. But if I zoom in quickly on two of the elements you mentioned, one is the government support. So we already talked a little bit about it. And the second one is revenue visibility, which is extremely important for lenders. So government support, I guess this is the cornerstone of any financing in the nuclear sector. Essentially, if you don't have strong government support, there won't be any financing that can happen. And I guess it takes two forms. One is establishing a clear national framework for nuclear energy project, and also the let's say the national strategy we needs to be on a long-term basis. And the second one is, in fact, a dedicated support package for the project that covers certain risks that the nuclear-specific risks that the lenders cannot take. On the revenue visibility side, I guess Roland already talked a little bit about it. There are different ways, but if we take the example of regulated asset-based model, this is really interesting because it does not only provide strong visibility over, for instance, 60 years, but it does provide predictable revenues both during the construction, which is really a game changer, and the operation. So I think for those two elements, yeah.
Thank you, Alexandre. Giuseppe, now Hexagon's value proposition, which you've presented, is to increase the technology readiness level of your portfolio companies, right? So which segment of the nuclear value chain are truly VC addressable, and what are the realistic exit pathways and the timeline given the current cycles that we are facing?
Yeah. Well, as said, our focus today is on the vendors, the technology providers, but of course it's important that the value chain can follow them to build up the entire ecosystem, in particular for the new small advanced reactors. Now, a large part of this value chain will be provided by the value chain for conventional reactors. Our main focus is to make this to work, to have the vendors progressing on their projects. And I get back to what I was describing before as the process of letting this technology to move on in terms of maturity. Now, what we forecast is that the first AUMRs will be available at the beginning of the 30s. Okay, this is what we see in terms of projections in our startup. We have already invested in 3 nuclear startups, and there will be also a lot of in terms of cost of gains for the learning experience. There are some studies that they predict a potential gain in terms of cost from the first of a kind to end of a kind of up to 70%. Because you progress on the learning curve. The timing is that one. What we see is that we will have to rely on government support as for conventional reactors, and on potential off-take contracts that they provide visibility to the investors from the early stage investors we are, but in particular for those that are supposed to come once we exit, because we need to exit at a certain moment. We have 10 years. I mean, 10 years, we need to make the job to make this technology to be attractive for those other category of investors that are what you call infrastructure tech funds. So infrastructure funds that are able to invest at lower level of maturity, let's say 7, 8 in TRL scale. You have the large growth funds that can take the risk from this position onwards. And then you have the corporates, of course, the industrials, that once they see the technologies have reached this level, then they can enter the game. And this is what I imagine they are waiting for. And I look in particular to Roland. So actually, that's the way the game looks structured. We have already a good news, because one of our investments already contracted with a supplier of data centers. Today there is a lot of focus on this, and we have contracted a certain amount of capacity to give in prior to this player. This shows that the market is already eager for 4th generation nuclear capacity with this time frame.
Thank you. I think with the spirit of trying to wrap up the conversation, so today is WNE 2025. In 2 years' time, what do you think would be, in the next WNE, the sort of key metric that would indicate that nuclear has become investable at scale. Do you want to start, Roland?
Yes, well, I think a simple metric will be the amount of capital raised by different projects. That's an easy answer. We can move forward to other ideas. I think today there is a lot of funds or limited partners in funds, LPs, which excludes formally nuclear still today from their investments. We have today in the European regulations limitation for nuclear. For example, there is some public funds for example, infrastructure funds, public European, which excludes nuclear as well for the mandate. So I think a good signs that market will have took off is that all these limitations for nuclear will have disappeared, and we will see and have a following of raising money more and more for nuclear. That's, I think, the key metrics we have to wait for.
Thank you. Alexandre.
Yeah, I think 2 years is probably a very short time frame, unfortunately, for nuclear, but I would say maybe monitoring the share of private capital that goes in, and hopefully between now and 2027, we can demonstrate that there is a larger share of private capital, both on the equity and the debt side that flows into nuclear.
Yeah, thank you. Giuseppe, final words.
Well, I picked the diplomatic side of your question, but it was a global question. Indeed, that is different with respect to geographies. It's already very much advanced in North America or in Asia. Now the question is how in Europe we make this to happen. And I think this actually reaches what my colleagues here already mentioned, is the amount of capital that you will be able to convince, to be addressed, to be invested in these technologies from the perspective of European investors. This could be easier once more countries in Europe, they play together. And today I'm very happy to see that Italy is coming back in the nuclear sector, and there are a lot of discussion going on with France. So there is a traction that can be provided by some countries in Europe in order to make an entire process to be able to make this scale up to happen.
Yeah. Thank you. Well, thank you all for your participation. We don't have time for Q&As, but we invite you to join next room and continue the conversation. Many thanks, everyone.
Thank you.
Thank you very much.
Thank you.